The housing market is hot. Maybe it's actually too hot right now. I've polled my economist friends and they all say that it is not a bubble. My real estate friends are convinced that it is not a bubble either. Personally, I totally disagree with their assessment, and today I want to tell you why I think there is maybe a little bit too much overheating in the housing market. And before I get into it, I want to clarify that when I say bubble, I don't mean a housing crash like we experienced in 2007, but I think prices are going to have to correct. So sit back and let's talk about the hot housing market. The housing market has been going up since it crashed in 2007. In 2009, the median house sold for roughly $208,000. We've seen prices go up to $346,000 for the median house sold in 2020. This increase in home prices is expected to continue and maybe even increase in 2021. In Cincinnati, where I'm at, the average house price has increased by 15% in the past year. This is not just a US phenomenon. The increase in home prices in the US is part of an international trend that we're seeing in developed economies. So why is this the case? Why are housing prices increasing so fast? The question that I'm asking myself is this sustainable? Is it sustainable growth, or is it a sign of an overheating housing market? Turns out this is not an easy answer and requires some detailed analysis. Let's start with what are the possible causes of this boom. The first cause is low interest rates. The federal funds rate has been decreasing since 2019. The target rate is down to 0 to 0.25%, which is the target introduced when the US economy experienced the pandemic. The decrease in Fed funds rate has caused long-term mortgage rates, like the 30-year mortgage rate, to fall to below 2.6%. And that was at the end of 2020. At the time of this recording, 30-year mortgages are ranging between 2.6 and 3% for 30-year fixed mortgages. These are really low interest rates, and low interest rates make purchasing a house and servicing the debt on a mortgage much cheaper. Due to the lower interest rates, it's cheaper to own a house today than it's been for a long while. Also, low interest rates create an incentive for people to spend their money rather than save it. Since interest rates on savings are low, the opportunity cost of spending your money is really low today. We're seeing people move money from cash holdings to consumption spending. This shift from saving to spending is what's fueling the housing demand. The low interest rates make mortgages cheaper and create an incentive to spend. Both of these will cause house prices to increase. The second factor is a housing shortage, and this is what my economist friends keep on telling me is the main reason why they think this is not a bubble. The supply of houses is not keeping up with the demand for them. Housing starts slowed after the financial crisis, and today we have higher production costs and more complex regulation that are stalling home building. People are choosing to renovate their homes instead of building new ones. And as our population grows, there's not enough homes to meet those demands for the new population. This is a graph from Fred that shows the supply of housing is at its lowest since the 1990s. And according to Goldman Sachs, this low supply of housing is supposed to last for several years. So if this is the case, then my economist friends and my real estate friends are correct. This is not a housing bubble, and we should see house prices continue to go up till eventually we have supply that meets the demand. The third reason for the increase in house prices is the relocation of homeowners. The pandemic has made it easier to work remotely. People are moving from high-cost cities to lower-cost cities. As they relocate, they are pushing home prices up in these low-cost cities. And if this is the case, then we should see home prices increase in low-cost cities, and home prices should decrease or remain constant in high-cost cities. So do you live in a high-cost city like New York? Are prices falling there? What's happening? Tell me, leave a comment. This relocation shift is fueled by states and cities also that are giving grants to people that want to relocate to their cities. I know of programs in West Virginia, Arkansas, and Nevada that are trying to attract new people to live there. The fourth reason is the scariest of them all, and that's speculation. A recent report estimated that $77 billion of homes are being purchased by investors. This is actually similar to what happened during the housing boom. Speculators pushed house prices up. However, my economist friends tell me that we shouldn't worry about this behavior since this time it's not leveraged, meaning the behavior is not fueled by debt, like it was back in the housing boom in the early 2000s. While I agree that there is not as much debt as there was in the past, there are some signs that this is not a healthy housing market. So let's talk about that. The reasons why I worry and why I think there is going to be a market correction. First, purchasing a house today involves behavior that has potential for causing house prices to not reflect their true value. This behavior does not fit the traditional real estate patterns that we have had for years. For instance, when you purchase a home, the process usually involves an inspection and an appraisal. This process is designed to give the buyer and the mortgage underwriter more information about the true value of the home. The inspection is to provide information on the structure of the house. Appraisals are going to assign market value for the house. In today's market, we are seeing offers that waive inspection and appraisals. Therefore, there might be a disconnect between purchase price and the actual value. This is more likely to happen with cash purchases. On the other hand, when appraisals occur, there has been an increase of instances where the appraisal does not reflect the purchase price. In the past, the purchase agreement would be renegotiated to the appraised value. Today, I am hearing of situations where the buyer is actually making up the difference. This tells me that home buyers are paying more for homes than appraised values would suggest they are worth. And this is what's causing this fast acceleration in home prices. In 1996, Alan Greenspan, at that time chair of the Fed, coined a phrase, irrational exuberance, which refers to the investor enthusiasm that drives asset prices higher than those assets' fundamentals justify. To me, that's what's happening in the housing market today. It just seems like there's a lot of irrational exuberance. Remember, I don't expect a crash, but I do see some cracks in the fundamentals, and our behavior around the housing market just doesn't make sense. What do you think? Is this a hot real estate market? Is it here to stay? And tell me why. See you next week.